Business credit, your company's financial report card. Running a small business is tough work. Every day brings new challenges and opportunities. You're passionate about your product or service. You believe in what you do and want to share it with the world. You pour your heart and soul into making it a success. Every ounce of effort goes into ensuring your business thrives. But there's one thing that can make or break your business credit. It's often overlooked but incredibly vital. Think of business credit like your company's financial report card. It reflects your financial health and reliability. It tells lenders and suppliers how responsible you are with money. They use this information to decide whether to do business with you. Good business credit opens doors to lower interest rates on loans. This can save you a significant amount of money over time. It helps you get better terms with suppliers. Better terms mean better cash flow and more flexibility for your business. A good credit score shows you're a reliable borrower. It builds trust and confidence in your financial management skills. This means you're more likely to get approved for financing. Access to capital is crucial for growth and expansion. Building business credit is crucial, especially when you're just starting out. It lays the foundation for future financial success. Lenders and suppliers want to see that you can handle credit responsibly. They look at your credit history to make informed decisions. Don't worry, we'll walk through the steps to build great credit. It's a process, but with the right guidance, you can achieve it. Remember, a strong business credit score gives you a competitive edge. It sets you apart from competitors and opens up new opportunities. It demonstrates financial stability and trustworthiness to potential investors and partners. They are more likely to invest in a business with solid credit. So, let's get started on building your business credit. With dedication and the right steps, you can achieve a strong credit score that will benefit your business for years to come. Building a strong foundation, establishing business credit. Building business credit is like building a house. It requires careful planning and a step-by-step approach to ensure everything is in place. You need a solid foundation. Without it, your efforts may crumble. The first step is to separate your personal and business finances. This distinction is crucial for accurate financial tracking and credibility. Open a business bank account and get a business credit card. These tools will help you manage your business expenses separately from your personal ones. Next, register your business with Dun & Bradstreet, Experian, and Equifax. These are the major credit reporting agencies that track business credit. These agencies track business credit. They collect data on your business's financial activities and generate a credit score. Make sure your business information is accurate and up to date with these agencies. Inaccurate information can negatively impact your credit score. Now, start building credit by paying your bills on time. Timely payments are a key factor in establishing a good credit history. This includes rent, utilities, and supplier invoices. Consistently paying these on time will reflect positively on your credit report. Consider getting a small business loan, even if you don't need it. This can help diversify your credit profile and show lenders that you can manage different types of credit. This shows lenders you're serious about building credit. It demonstrates your commitment to growing your business responsibly. Remember, building good credit takes time and effort. It's a gradual process that requires patience and consistency. Be patient and consistent with your payments, and you'll see your credit score grow. Over time, your diligent efforts will pay off, leading to better financial opportunities for your business. Keeping your credit score healthy, tips for success. Once you've established your business credit, it's crucial to maintain it. This involves a series of consistent and mindful practices that ensure your credit remains in good standing. Keep a close eye on your business credit report. Regularly reviewing your report helps you catch any discrepancies or errors early on. You can get a free copy from Dun & Bradstreet, Experian, and Equifax. These reports provide a comprehensive overview of your credit status. Paying your bills on time is the most important factor in maintaining good credit. Timely payments reflect positively on your credit report and build trust with lenders. Set up payment reminders or automate payments to avoid late fees. This ensures you never miss a payment, which can significantly impact your credit score. Keep your credit utilization low. This means using only a small portion of your available credit, which shows that you manage your credit responsibly. This means don't use all the credit available to you. Aim to keep your credit utilization below 30% of your total credit limit. Avoid closing old credit accounts, even if you don't use them anymore. Older accounts contribute to the length of your credit history, which is a key factor in your credit score. The length of your credit history matters. The longer your credit history, the better it reflects on your credit worthiness. Finally, diversify your credit mix by having a combination of credit cards and loans. A varied credit portfolio shows that you can handle different types of credit responsibly. Remember, maintaining good business credit is an ongoing process. It requires continuous effort and attention to detail. Stay vigilant and proactive in managing your credit. Regular monitoring and responsible credit practices will help you achieve long-term financial success. Working with creditors, building strong relationships. Building strong relationships with your creditors is essential for small business success. Communication is key. If you're facing financial difficulties, reach out to your creditors immediately. Don't ignore their calls or letters. Explain your situation honestly and explore possible solutions together. Be proactive in negotiating payment plans if needed. Creditors are often willing to work with you if you're upfront and communicative. Remember, your creditors want you to succeed. After all, your success is their success. Maintaining open and honest communication can help you navigate challenging times together. Section 5. The power of net terms. Negotiating favorable terms. Net terms are payment agreements that give you a set period to pay an invoice. For example, net 30 means you have 30 days from the invoice date to pay. Negotiating favorable net terms with suppliers can improve your cash flow. When negotiating, be confident and emphasize your business's good payment history. Start by asking for a longer payment term than you need. Be willing to compromise and find a mutually beneficial agreement. Remember, negotiating net terms is a common business practice. Don't be afraid to ask for what you need. It can make a big difference in managing your cash flow. Section 6. Protecting your business. Credit monitoring for fraud. Protecting your business credit from fraud is crucial. Regularly monitor your business credit reports for any suspicious activity. Look for unauthorized accounts, inquiries, or changes to your business information. Report any discrepancies to the credit bureaus immediately. Consider implementing fraud prevention measures, such as setting up alerts for new account openings. Educate your employees about phishing scams and other fraudulent activities. Remember, staying vigilant and taking proactive steps to protect your business credit can save you from financial headaches down the road. Section 7. Dealing with credit challenges, overcoming obstacles. Even with the best intentions, businesses may face credit challenges. If you find yourself in this situation, don't panic. There are steps you can take to overcome these obstacles. First, identify the root cause of the problem. Is it late payments, high credit utilization, or something else? Once you understand the issue, create a plan to address it. This may involve negotiating with creditors, consolidating debt, or seeking professional guidance. Remember, facing credit challenges doesn't mean the end of your business. It's an opportunity to learn, adapt, and emerge stronger. Section 8. Business credit cards, using them wisely. Business credit cards can be valuable tools for managing expenses and building credit. However, it's essential to use them responsibly. Choose a card with a low interest rate and rewards that align with your business needs. Only charge what you can afford to pay back in full each month. Avoid carrying a balance, as interest charges can add up quickly. Set spending limits and track your expenses closely. Remember, business credit cards should be used strategically to benefit your business, not to accumulate unnecessary debt. Section 9. Business loans, securing funding for growth. Business loans can provide the capital you need to expand your operations, purchase inventory, or hire new employees. Before applying for a loan, determine how much you need and what type of loan is right for your business. Shop around for the best interest rates and terms from different lenders. Prepare a strong loan proposal that outlines your business plan, financial projections, and how you'll use the funds. Be prepared to provide collateral, such as equipment or real estate, to secure the loan. Remember, taking on debt is a significant financial decision. Carefully consider the terms and ensure you can comfortably make the payments before committing. Section 10. The rewards of good credit. Reaping the benefits. Building and maintaining good business credit comes with significant rewards. You'll qualify for lower interest rates on loans, saving you money in the long run. Suppliers will offer you more favorable terms, such as extended payment windows. You'll have greater access to financing options, giving you more flexibility to grow your business. A strong credit score enhances your business's reputation and credibility in the marketplace. Remember, good business credit is an investment that pays off in multiple ways. It opens doors to opportunities and sets your business up for long-term success. Section 11. Your path to financial freedom. Taking control of your business credit. Mastering business credit is an ongoing journey, not a destination. By taking the steps outlined in this guide, you're well on your way to establishing a solid financial foundation for your small business. Remember to separate your personal and business finances, build a positive credit history, and manage your debts responsibly. Stay informed about your credit score and take steps to protect your business from fraud. Don't be afraid to seek professional guidance when needed. Taking control of your business credit empowers you to make informed financial decisions and achieve your entrepreneurial dreams. You've got this. Remember, financial peace is possible. Now go make it happen.